Ernie, looking at the August Mid-America, what are we seeing?
Cindy, our survey of supply managers in the 9 Mid-America states, that's stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, the overall reading, that's the leading economic indicator for the month of August, is up a bit, but still in a range that's just indicating that this economy, I'll say, is limping along, not nearly as strong as we'd like to see. Heading into the fourth quarter of this year, our surveys indicate that growth for the fourth quarter of 2013 is not going to be as strong as what we saw in 2012. And of course, we've got what's going on in the Middle East or not going on. That's creating some real uncertainties, pushing up oil prices. Of course, that's spilling over into our survey.
How does employment for the region look?
You know, Cindy, the employment number was down a bit from last month, and what we're seeing in the Mid-America region is much like what we're seeing in the national economy. It's just a lot of part-time hiring, believe it or not. The numbers are showing up. If you look at the average hours worked, down a bit, still weak. And we're going to see heading into the fourth quarter, hiring is probably, we're pulling in probably at 1%. Now that doesn't mean anything to most non-economists, but what we'd like to see and what we should see is north of 2% to bring the unemployment, well, the unemployment rates for most of the states in this region are pretty low. But to get to pre-recession employment levels, we're going to have to see double the employment gains, monthly employment gains that we're now seeing in the region. Durable goods continue to outshine the non-durable goods in the area. Food processing is looking better. Agriculture, anything connected to agriculture, and this is very, very important for this part of the region. Agriculture is very important. Linked to agriculture, not as strong. It is much, I won't say much weaker. That it's just the growth is not as strong for companies that produce agricultural equipment. Not nearly the growth that we've seen. And the air is coming out of the agricultural bubble, but that's not such a bad thing. We had a heck of a lot of air in that bubble for agriculture, and it's pushed up the overall economy. We're seeing some of that coming out, some of the air coming out of that bubble, and that's not such a bad thing.
What does that mean for trade for the area?
You know, Cindy, trade is ultra, whatever you want, whatever we wish to call it, very important for this part of the country. Trade, and the number ticked up fairly significantly from last month. Last month's number was not good, and that was a bit of a concern, at least for me. And the trade number was up, and that, again, we're seeing the Federal Reserve is going to control a lot of that, and unfortunately they're going to be raising rates. At least rates are going to be rising a little bit from Federal Reserve statements or Federal Reserve action. I expect at their September the 17th and 18th meeting, I think they're going to say we're going to begin tapering the bond purchase. Now, what the heck does that mean? That means that interest rates are going to begin rising a little bit more. What that means is the value of the dollar will rise. What that will mean is that puts a downward pressure on exports, particularly agriculture. So again, looking ahead, ag and connected to ag are not going to be nearly as strong in 2013 fourth quarter as they were for 2012 fourth quarter.
What about the impact? Well, you were talking about sequestration. What about wholesale prices? What are we seeing there?
You know, Cynthia, we're beginning to see, and this is a troubling, to some degree we'd like to see a little more inflation, but I see our inflation gauge was up for the month. We're seeing a little more price pressures in there, and of course the Federal Reserve has had their foot on the accelerator for the economy, and almost all economists and non-economists have been expecting price growth, expect to see more of it. Now we're seeing some of it. So we're going to see inflation heading north of 2%, and that's the Fed wants to see it in the 2% range. It's going to get a little ahead of the Federal Reserve's their targets, and that's going to push the Fed to be perhaps even more aggressive at tapering, if that makes sense. In other words, we're likely to see more upward pressure on interest rates, long term, not short term, long term, and the value of the dollar is going to grow, and that's going to put downward pressure on agricultural commodities, downward pressure on exports. We're seeing that. For the month of August, the import number was a bit weaker. That's just indicating that companies are not buying from abroad as much. And why is that? Because they're not growing as much. And that, again, the fourth quarter for 2013 is going to be weaker than the same period for 2012. Now I know that goes against what most folks are seeing most economists are seeing for the national economy, but I'm seeing in this part of the country. Well, the business confidence was down, and my goodness, how could you not expect that with the turmoil in the Middle East, the numbers that we've been seeing from the national economy? They're a mixed picture, but the last employment report was not good. And the next employment report, which comes out on September the 6th, is probably going to also be mediocre. And we need better than mediocre. We cannot continue to limp along the national economy mediocre. Now, in this part of the country, Mid-American region, we have not been mediocre, but it looks like we're heading into mediocre territory. In other words, we're going to join the national economy in slower economic growth, slower job gains, part-time job gains. We're going to see that, and a little bit higher inflationary pressures. We ask about the next 6 months how the prices they expect for the inputs that they buy. They're about 4 to 5%. That's a little stronger than what we've been seeing. That's annualized 4 to 5%. This month we ask about sequestration. We've been asking about sequestration every month, the federal spending cuts, if you will, that we're seeing that now. About 2/3 are saying no impacts, 1/3 saying modest impacts. That's all very consistent month to month to month. And we're not seeing any upturn there. And of course, the real big is we're moving out of the economic territory into the silly, I'll call it silly season of politics. And now with the President and the Congress about to begin deliberations on so many things, the debt ceiling, the budget, the sequestration, all these factors, and that creates uncertainty, and uncertainty is not good for the economy. So we need to get the Congress and the President together, get this out of the way. We're seeing it in our surveys. We're seeing the business confidence coming down. We need to see that changed.